Good morning. Happy Friday. I'm Lex, your host. Today on the Brew, we have Paulina Likos, as we do every Friday. Three topics. We're going to talk about Supermicro. We are going to talk about the big tech winners and losers in 2024, Q3, that is. And why is Warren Buffett sitting on so much cabbage? He's got a big bankroll of cash, I think, waiting to be deployed. We're going to find out. Let's get to all this and more after the bell. Ooh, see? Love it. What do you think, Paulina?
I think it's great.
I like the blast off at the end. We're gonna fix it. I'm telling you, I keep saying that, but we're gonna get it. Molly's gonna figure this out. By the way, speaking of Molly, who is this other woman, Paulina? It used to be just you and me. She's invading our space.
Molly's back. Molly's back.
What the heck?
We're gonna have some CTs. I'm gonna go off some random tangents, and you're like, "What is she talking about?" I know you missed it.
We did miss it. We miss you, Molly. You know that. So, Paulina, thanks for coming on Friday again. Here we go. By the way, Paulina, I never told you this, but I love the Fridays, not because it's you. It is because it's you, but it's also the start of the weekend.
Yeah.
Which is awesome. You're always so happy and you're always smiling. So that makes me happy too.
I'm telling you, it's the best way to start the end of the week.
I agree. All right. I know you're pressed for time. Let's get to it. I have some questions, but which one do you want to tackle first? You want to go Supermicro or something else?
We can go with Supermicro.
Because I don't understand this one.
Okay.
I don't know what Hindenburg research means. I don't know what that is.
I'll break it down.
Okay.
So Hindenburg Research, they're this US-based investment research firm, and they specialize in uncovering corporate fraud. So they do massive amounts of research on different companies that they're focused on. So they're a short seller firm, and in their investigations, they reach out to former employees at a given company, and they just do a lot of extensive research, and they try to uncover any sort of forensic accounting issues or financial fraud and so forth. So they actually suspected this with Supermicro, and they dropped a scathing report on Supermicro. And Supermicro, for those who don't know, it's an American tech firm, and they sell high-performance servers and other IT equipment for data centers and cloud computing and a lot of AI equipment. And essentially, Hindenburg is accusing the company of serious misconduct in their financial accounting. So that's the news there. And so their argument, Hindenburg is saying that Supermicro has manipulated a bunch of its numbers so its financials looks better. And they claim that the company has pushed their sales teams to fill orders in a weird way, and that has inflated a lot of their sales figures. So when this report dropped, Supermicro stock plunged 33%, and then the next day it fell another 12%. This obviously wasn't a good thing for the overall market as well. So it was a big piece of news.
Okay, so let me ask you a question. I don't mind if I do. You said that they're a short selling firm, right? This Hindenburg group. Doesn't it seem? Should be Molly's question. Doesn't it seem in their best interest?
Put the fishing pole out. Let me.
This is in their best interest to put out shitty reports on companies so that they can sell the company short. I mean, it seems like a conflict of interest to me. I don't know. Am I being silly? Sort of. Yeah. I don't know. What do you think, Molly? Paulina, help me out.
Well, you know what I mean, like, and then our own government didn't do that in the last couple of years and bump up GDP numbers with government spending, but whatever. We're not going to talk about that.
We're
It
not
doesn't,
talking about that.
yeah, it doesn't look heavy-headed though.
But I think
But
it's
I
a
do
logical
agree.
question, right?
I do agree.
And I didn't know that until you said in your intro to it, they are a short-selling entity who puts a research report on
Incentivized.
malfeasance, it sounds like, in corporations. Well, I mean, could be a little self-serving if you think about it. What do you think? Anything?
I think it turns you look at their fundamentals. Is their business good? I mean, if there's an accounting snafu, and by the way, isn't it interesting that AI is going to just remove all of that off the table pretty soon, where
AI
remove human error,
make
make it transparent. But
what is the ticker for Supermicro? Does anyone know?
Yes, SMCI.
Are you sure?
I could. I mean, I am blonde.
I know. I believe you because I certainly.
I am blonde.
You are blonde. SMCI is correct. Okay, so I'm looking at the chart here too now. That's a 1 day. I don't want to.
That's a heavy drop.
What do I want? Like a 6 month to see where it's been? Oh, it's gotten hammered. You're right. Oh my god, this is a goddamn roadkill. It's like one of those squished raccoons on the side of the road right now.
Well, you know what my theory is that these guys come out, they tank this like whatever the ticker behind this horrible news, and that's when you get in because they're corporate. I mean, they're into servers and store. That's not going anywhere.
Right.
In fact, we probably have a shortage. So this is going to be a dead cat bounce. I would kind of jump in at the low. I think, once
this is not investment advice.
No, not investment advice. But I would say that, lightning doesn't strike with heavy duty accounting issues.
Okay.
And
I'm with you there. And Paulina, how credible are Hindenburg Research's allegations, would you say? Do you know? I mean, is it?
Yeah, that's a fair question. They have gone after other companies in the past, and they do have a track record of targeting companies that are suspected of misconduct. And they do have thorough investigative research, and it has held up in the past. But their reports are very highly scrutinized, and and obviously Supermicro has come back and saying that it's they're not explaining the full picture. Of course, they're coming back to defend their position, but obviously this is a huge concern from an investor perspective, but also from a short selling perspective, you could see it as an opportunity.
Yeah, well, yeah, that's right. So, but if these allegations do in fact prove to be true, what are the consequences for Supermicro? I mean, there's got to be some massive fines, legal, blah blah blah, right?
Yeah.
I sometimes I think those are just slap on the hands. I mean, they're a huge company. They have competition with storage, but they have broad product range. They're customizable. They high performance servers are into energy efficiency. If that's important to you. So I think they look really strong. Except the guys in the basement of who are just asking for their stapler made an accounting a big one. I mean, a big one. Accounting mistake, and some guys in Tahiti on vacation enjoying that mistake, and we can't find them, probably. But I think they look good. What do you think, Paulina? Do they look good?
Well, I mean, some of the things that Hindenburg has raised are pretty suspicious. Just so one thing that they point out are regulatory concerns. So Hindenburg points out that there's potential violations of export rules, where they were hinting at how Supermicro may have evaded some sanctions by dealing with entities in Russia and China. And they did settle some governance issues with the SEC in the past over accounting issues. And some of these accounting issues were dealt with, like the brother of the CEO who was doing some suspicious activity, who they had to let go, but then they rehired that executive. So there was some violations that were raising a lot of questions from an accountability perspective and an oversight perspective. So there's just a lot of strange things happening from Hindenburg's research there. Obviously, Supermicro has come out. They've disputed these claims. They're saying that they were misleading, and that they're going to address all these issues.
So
yeah.
Go ahead, Mom. Sorry.
Well, you bring up a good point. I mean, data security. If they're doing business with Russia and China, that might concern me. So whoever's holding that information on the servers, how secure is that, and who has access? And when you look at the numbers of intellectual property theft, it's, I mean, that's probably World War D. Can I call that World War D for data?
D for data. Thank you. And thank you. Very good. Okay. I didn't realize how big of a company this is. They're pretty solid, right? $13.5 billion market cap. It's not, not tiny, I guess, but it's not like Apple or anything. Okay, I'm gonna keep my eye on that one. I didn't know this one, so thank you for bringing that one up. I did not know this one. Let's move along. So Q3 2024. You say winners and laggards. I say winners and losers.
I wouldn't necessarily.
You're just being nice. You have to be nice. You have to say laggards because it's a little correct. I don't have to be correct. I say losers. So let's hear it. Who are they? Who are the winners and losers?
All right. So obviously, big tech required huge attention from investors, and the two standout companies from that Magnificent Seven cohort was Amazon. They had a phenomenal quarter in all of its businesses. Revenue beat expectations. Its cloud unit, which is seen as the growth engine of the company, they saw double-digit revenue growth, and their operating income, their profitability was very strong as well. Advertising came in strong. And then the other winner was Alphabet. And this was some much needed positive news from Alphabet because there's a lot of risks that the company has been facing recently, notably the regulatory headwinds from the DOJ antitrust cases. And then you have more broadly the threat of chatbots trying to take some of that share from the search engines. But Alphabet came in strong. They delivered a strong third quarter because they show that they're monetizing their AI investments, and they had strong performance in their cloud unit as well. So those were the two winners there for Amazon and Alphabet.
Okay, and what were the laggards?
I would call them laggards because they're huge companies. Apple and Microsoft were the laggards. They had more of a mixed news. Apple has been lagging recently because there's been some lukewarm feelings around the Apple 16 that recently came out. Demand doesn't seem to be as robust as previous versions. Okay. So Apple's iPhone sales, they were pretty strong. They were up 5.5%. But the services revenue, that was up as well. But the stock dipped after it reported, and I think it was because there has been some lagging sentiment around the iPhone demand. Yep. And then we had Microsoft. That was a little bit mixed as well. They had strong growth overall, but investors were hoping for more. And I think that's what the issue was here. Expectations were very high, and Microsoft was kind of in line. And when you have high expectations and you just meet those expectations, the stock kind of falters. Yeah.
Okay. Fair enough. I didn't realize that Apple, the iPhone 16 were just sort of blasé, the sales of the iPhone. I'm on the even scale, meaning I get the 10, the 12, the 14, and now the 16. And some people are on the odd scale, 13, the 15, etc. So it seems like the evens have bigger releases. I don't know. So this new release has the big AI in it, right?
So it didn't. So Apple Intelligence has been out for a little over a week now. It wasn't released with the 16, but it can now be updated, the Apple Intelligence. And this is supposed to drive a lot of demand, maybe not for the 16, but maybe for future versions. So we might be seeing that demand ramp up.
But it's not a disaster. It's just still, it's Apple's still Apple. They're $3 trillion and blah, blah, blah.
Apple
right?
is still one of the greatest tech companies alive. Yes.
Yeah. Okay. Good.
I have a question for you, Lex. So, there's huge concerns that Alphabet bought DeepMind, and Elon brought up some good points about that. And now the DOJ is after them about, you know, search engine dominance. And so if there's some antitrust stuff going on, and you know, not that that would ever go through, but if some of these big fish get separated, there are some benefits as far as, you know, trading those stocks when you know, easier, lower barrier of entry to get in. You know, how does that affect, you know, if a huge company gets broken up, how would you trade that, and how do the owners benefit, and what would a market maker do to leverage that we need to know about?
Well, so unfortunately, the answer is it depends. It depends on how the deal is ultimately defined. If it's truly a breakup and there is a company that remains in a new company, right? You know, what does that mean? Is it a par value? Is it like a takeover in a way? You don't know, because if it's a takeover, there could be a huge opportunity for an upside or even a downside play, right? So when we were in the market making business, we loved takeovers, and takeovers all had special deals to them. And there's a lot of mathematics and banking behind the deal. So there's always this discrepancy of how the options were priced and how the deal was going to play out. And there could be remainders of the deal left over, and it would open up at a new lower price, the stub. So those are always kind of fun. But I don't know anything about how if they get broken up, if that's going to be how it looks in the end. Will it be a stub company and a new company? Will it be just two separate companies? Remember when? Now, Molly, you might be old enough.
I was alive before the personal computer. I just want to state that.
Yeah, Molly, these two gals are young. I'm making fun because I'm the old guy. But when what's his name? Really old guy, Rockefeller.
Yeah, that breakup benefited him, by the way, if you look into that. Yeah.
Standard Oil, right? And the government said, too big. Sorry, we're breaking you up. But guess what that did to him? It made him wealthier than he could ever imagine.
Yeah,
he got component parts in each of the little companies that were broken up, and they all succeeded, bigger than his wildest dreams, and he became such a wealthy, crazy. He was already wealthy, but it's insane. And you know, my feeling is that's going to be something similar with if they try to break up one of these companies.
You kind of diversify your ownership in these things. You get less scrutiny. You can headquarter around the world, so you can kind of hedge your bets against, as far as, you know, governance. And there's all sorts of benefits that you might get. And then, so sometimes I just kind of want to keep an eye on, you know, if someone's in court and they're like, yeah, we should split up. We want to always look at like every angle.
Yeah, I get shares in a new company too. Woohoo! So Paulina, does every company like this, these tech companies, right? They have to have some sentence in their description that has the word AI in it, don't they? Going forward a little bit. I mean, Apple did it, right? Because Apple didn't have that, and now they have Apple Intelligence AI. Cute. But aren't these companies they have to like grab this comet and hold on, don't they?
Oh, yeah. One thing that is consistent across all of these big tech companies is that they're investing massive amounts of money in building out artificial intelligence, whether it be through hardware like the GPUs or infrastructure, in order to, you know, train and process their AI models. So that has been consistent throughout, you know, all the quarters so far in 2024, and the stocks are actually going up on that news. You would think that higher capex is a headwind, which could be a headwind to profitability, at least in the short term. But over the long term, it's seen as, you know, they're trying to meet this massive demand from their customers. And there's a more possibility of monetizing that demand in the future. So it's actually seen as a positive.
Okay, cool. You know, I was just thinking when you said AI and all this stuff. Have you ever noticed, like on Instagram or Facebook, like the AI, the people, whether it's male or female, they have these AI. Are those real people?
So this is crazy. Yeah, this is crazy.
Those aren't real people, right? Because every one of them, male or female, are beautiful. There's like no way can that be a real human.
Yeah.
Are they really fake?
It's real. It's really fake. And it could be said. And here's the crazy thing. So, yes. So what's happening is,
maybe it's creepy. I look at it
right now. I mean, right now, the tide is about to turn. So just like in my generation, I didn't grow up with Instagram and cell phones, and it's just crazy what kids have to go through now. But what we're going to now approach is that artificial intelligence is curating what we're being fed. And so it may not, and AI is going to be instructed to gravitate towards revenue. So whatever bleeds leads, and so it's going to be curated it's going to be overnight into this huge tidal.
I gotta be honest, I hate it. I think it sucks.
Yeah,
I can't tell what's real and what's not now. I'm like, this is. I don't even know if where people are traveling. It's not people I know, but they're like in some beautiful place. Like, is it real? And I love the houses, all the architectural things. I know they're all fake. Not real houses, but I'm like, oh, I don't know if I like this anymore. It's beautiful.
Well, here's the positive side, and you guys tell me about the positive side. And Jeff Bezos said this. He says, another way to look at AI is that it's kind of a telescope. So it helps us see things. So it can generate and speed up imagination, and then lead to, and so it's lead to new inventions, etc. So there is a positive, but we have to be absolutely diligent internally here. And I don't want to see regulation coming in and starting to squash what we get to view, because that's a slippery slope, First Amendment. So I want to make sure that each person, when they absorb information, they go do the research to see if it's actually real, or find their human counterparts that guide them to actual real life interviews and information, et cetera. And watch what your kids are doing. I don't have kids, but watch what they're doing. Yeah. It's crazy.
I know, it's nuts. I know. Okay, we have one more point. I saved this one for last because I really like this guy. I don't know why I do, but I do. Warren Buffett. So he's sitting on a smoking heap of Benjamins. He's got, I read today, correct me if I'm wrong, 325 billion in cash he's sitting on. And you're going to tell us why, or maybe how, and what the deal is. But my fear is this, that he's doing that because some tragedy is about to unfold in the marketplace, and that could be relative to this election, yada yada, who knows. So that's my fear, is that he's like looking out at the horizon and saying, I don't like what I see one bit, and if this election goes one way, this could be a disaster. I could be wrong, but Paulina, I'm gonna tee it up for you.
Yeah, thanks. So
wow.
The Oracle of Omaha, as they call him, obviously he leads Berkshire Hathaway. And when he makes moves, whether he's buying or selling, they're massive moves. So he's made some significant changes in his portfolio during the third quarter, most notably in his positions within Apple and Bank of America. So for Apple, he dropped his stake by about 25%. And that fell from 84 billion at the start of Q3 to 69 billion by the end of September. So we're not really sure why he sold, but it could be because he's taking some profits, because Apple stock has been up roughly 10%, during the quarter.
Yep.
So that's Apple. And then you had Bank of America too. So Buffett cut his stake in Bank of America, reducing it from 41 billion in June to 31 billion at the end of Q3.
Time limit.
Sorry.
Buffett and the political uncertainty. You think is there any chance it's that? He's concerned over economic, political tensions or downturn, do you think? Or I think you kind of said maybe he's just being a smart investor and getting some gunpowder.
Yeah, he could be. I mean, he's a value investor, right? So he might be looking at some of these stocks, thinking that the valuations are just so unreasonably high that he wants to reset his position.
Makes sense.
Yeah. So also the economy has arguably been on good footing, but at the end of the day, the trend we're seeing among consumers is that they're not in the most ideal position, and we're seeing this even ahead of the holiday season, where consumers are expected to spend at a 6-year low, which is obviously going to have an impact on consumer-focused companies.
Yeah.
There's a lot of things to consider, a lot of factors.
Okay. I mean, you bring up a good point where the GDP looks good, But if you back out government spending over the last 2 years, it's actually relatively flat, implying some sort of recession. And so, when you talk to companies, they are feeling that. So we're expected a Fed rate drop again, but really, we'll see how that goes. So maybe if someone is looking at real GDP numbers and backing that out, you'll start to see that it's not as good as it looks. And so maybe that's why the cash hold.
Yeah, we'll see.
Yeah.
But good. These are good topics. They're always good, but I especially like these. Very good. Thanks, Paulina.
Thanks, Paulina.
Good to see you. I know you got to go, and you have a great weekend because it is Friday. And, and we will see how the Philadelphia Eagles do this week because they let me down in the past. But that's okay. She's from Philadelphia. Okay,
I got it.
She can't help it. She's just from there. All right, Paulina, great to see you as always. We'll talk next week and see how this all plays out.
Sounds good.
Thanks, you guys.
Bye, guys.
Bye. You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.